In the late 1990s, the world was on fire. It wasn't because of a war or a crisis. It was because of an idea, a digital revolution. They promised us that the World Wide Web would change everything. The new economy was here. Inflation was dead, and the stock market was a permanent ATM for the middle class. Ordinary people were making fortunes overnight. But by the year 2000, the greatest party in financial history became its worst nightmare. The dream was simple: e-commerce. Before Amazon was a giant, and before Google existed, the potential of the web was intoxicating. It was a digital gold rush. Investors believed that eyeballs were more important than profits. Companies that had never sold a single product were valued at billions of dollars just because they added .com to their name. In 1999 alone, the Nasdaq index rose by 85%. It felt like it could never end. As the bubble grew, so did the lunacy. This wasn't about building sustainable businesses. It was about making a quick buck. Super Bowl commercials cost millions just to advertise companies that had no business plan. Day trading became the national pastime as construction workers and retirees left their jobs to trade stocks online. Everyone believed they were an expert, because in a bubble, everyone is a winner on paper. The warning signs were glaring, but the world looked away. Valuation models were abandoned. Financial experts who suggested caution were fired or labeled out of touch. But behind the hype, the math was brutal. Hundreds of these .com companies were burning through their cash at an impossible rate. They were spending fortunes on advertising and luxury offices, but they weren't making any money. The engine was running on empty, and nobody noticed. The bubble didn't just leak, it burst. In March of 2000, reality finally caught up. It started with a small sell-off that quickly became an avalanche of panic. Major tech companies like Cisco and Intel lost massive amounts of value. But the real damage was in the smaller .coms. Hundreds of them, companies like Pets.com and Webvan, went from multi-billion-dollar giants to worthless in weeks. Hundreds of thousands of workers lost their jobs in what the media called Silicon Alley's Black Friday. The aftermath was a financial graveyard. The Nasdaq lost over 75% of its value, wiping out $5 trillion in household wealth. It was a brutal reminder that the laws of economics cannot be broken by technology. The dream of the new economy died on the trading floor. The optimism was replaced by a deep recession, leaving millions with empty wallets and a profound distrust of Wall Street. The .com bubble taught us a definitive lesson. When hype overcomes reason, tragedy follows. The internet did change the world, but not the way the hype men promised. It would take years for true giants like Amazon and Google to rebuild the trust and prove that the digital dream was real. Thanks for watching. If you want to understand the forces that truly shape our financial world, hit that subscribe button. But I want to know, what is the craziest investing bubble you've ever seen? Tell us in the comments, and I'll see you in the next one.